Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live. Today is Friday, October 11th, 2019, and we are now in the final hour of the trading day, and we are also in the final hour of the trading week. So it's been a very interesting week. We're having a really strong day today. The bulls are back. They're out in force. We're having a great day. So these are the kind of days that you live for when you are a trader, all right? You have a lot of chopping around, going nowhere, one step forward, one step back. But today we took a big step forward. So I'm definitely grateful for that. As you know, I believe that the closing prices of the day are as close as you can get them to the close of the price of the day, or the most valid prices of the day during the day. You have the algorithms, you have the day traders battling it out, fighting it out, moving it around. I consider it a lot of noise. At the end of the day, the large financial institutions, the market makers, the big volume, the big money comes in and moves the prices around. And I would rather hitch my wagon to the big financial institutions and what their opinion of the market is, rather than just algorithms and day traders. And so that is why I base the majority of my buying and selling decisions based upon the closing price. So, hey, Steve Burns. Hey man, what's going on? Great day, Steve. Really good to have you here. Steve says, "Hey Greg, I think Trump is talking with China in the White House right now." Well, yeah, I mean that's I guess what this rally is about, right? It's about partial trade deal. I don't know what that means, but obviously the market liked it, so we're having a great day. Steve, I know you're having a great day. I know I've been following your positions, and you're having a monster day. So congratulations, buddy. You deserve it. Thank you for everything you do with all your great books and your knowledge and your website and your mentoring. And I can't say enough good things about Steve Burns. So, yep, this is fantastic. Fantastic. So, all right. Well, it looks like we're coming through okay then. So let us talk about what we're going to do today. So first thing, we're going to go ahead, we're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to look at all my current positions. We're going to talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them going forward, either to the upside or to the downside. After that, we're going to do a few minutes on trader psychology, as I mentioned each day. Developing your skills at managing your emotions is the biggest skill that you're going to use in trading. The technicals, you are going to learn those eventually. And after you learn those, then it's going to be up to you and your mental state on how you approach the market, whether you have big up days like this, or big down days, or winning streaks, or losing streaks. Remember now, your skill, the greatest skill you can have in trading, is not your chart reading abilities. It is your mental state, whether or not you can follow your plan based upon the opposing emotions that you're going to have. Because a lot of the times, you really want to do something, but your plan doesn't call for it, and then you just have to stand aside. Other times you really don't want to do something, but your plan calls for you to do it, and so you're going to have to make the trade. So think of patience, and think of following your plan as an actual skill, and managing your emotions as a skill. If you look at it that way, maybe you'll think, okay, I'm feeling this way. I don't want to do this, or I do want to do this, but I'm not supposed to. And that is where skill comes in managing your emotions. So we're going to talk about trader psychology. After that, we are going to go down through my watch list. We're going to go down through each stock one by one. We're going to take a look at the support and resistance levels. We're going to take a look at the technical indicators. I look at technical indicators as possible groups of buyers. And so if I can find a stock that has 2, 3, 4 technical indicators lining up at the same time, then I look at that as 2, 3, or 4 groups of buyers lining up and coming in at the same time. And obviously, if you want a stock to go up, you need to be in the company of other buyers. So it just makes sense, right? If you don't have any indicators, not even one, what are the chances that you are going to have a lot of buyers there, right? I mean, it's pretty simple. So think of multiple indicators lining up as multiple groups of buyers. And if you want something to go up, the more buyers, the better, and really increases your chance of having a profitable trade. All right, so we're going to go down through. We're going to look for that. If we can find something that looks good, we're going to look at RSI levels. We're going to look at moving averages. We're going to look at MACD. We're going to look at possible crossovers. We have some crossovers today as well. So we'll go down through. We'll take a look. We'll mark some possible candidates, and then towards the end of the day, before the market closes, we'll go through those possible candidates, whittle them down, pick the very best ones. And if there's something good, then I will go ahead and take a position in that at the end of the day. And then after the market closes, if you have any questions whatsoever, please let me know. I'm happy to clarify them. If you want me to take a look at any stocks, I'm happy to do that. And I might add that if you see something today before the end of the market and you think it would be beneficial for the group to look at, please do me a favor, type it in, put some stars by it or something so I know it is something that needs more attention before the market closes. If it's just something you want to look at in general, then I'll take a look at that at the end of the day. But if something looks really good, you think it would be beneficial for the group, put some stars by it. That way I can identify it as a possible end of the dayer, okay? And if I can't get through to everybody, I apologize. I'm back and forth on the screen, so sometimes I miss stuff, but I will, at the very, very least, hopefully take a look at everything when the market closes. So that is the plan. Sound good? All right, so hang tight, and I'm going to run the U.S. legal disclaimer. I will be back in about 40 seconds. Thanks a lot.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, thanks for holding through that with me. And by the way, thank you everybody for coming by today. I really do appreciate you guys showing up, taking an hour and a half out of your day to watch this podcast, and I really hope it is helpful for you. I hope it's improving your trading, your investing, the way you look at the market. Yeah, that's why we do this show, right? So I really hope it's helping. So Murat, how you doing, Murat? Murat says, hi Greg, I had a long position on oil yesterday and got my target, and then I reversed and shorted. It was moving nicely, but 6 a.m. in the morning I was stopped out because of the tankers shooting. Yeah, I saw that. Darn it. Yeah, well, that's trading for you, huh? Dang it. Sorry, buddy. Well, I hope you had some long positions also. Kurt, hey, how you doing? Hey, Greg, once again, great class last night. Learning so much and loving every minute of it. Oh, thank you, Kurt. Kurt's one of my current students. We had a good class last night. Last night, I really put Kurt on the spot, and I think probably 75% of the class I had him breaking down charts to me. What do we do if it goes up? What do we do if it goes down? What's good about this chart? What's bad about this chart? But Kirk, I think, is really starting to lock it in. He's doing really well. So congratulations, Kurt. I really honestly feel like you're making some good progress, and I think you have a lot better understanding of the markets now than when we first started. Murat says, I had to give 60% of my profit back when I opened a position. I started out with a rather large stop to not get shaken out. Then I was hit by missiles. Yeah, literally missiles to the tankers and missiles to your position. But it looks like you still had a profit though, right? 60% you gave back, but does that mean you left 40%? Hope so. Hope so, hope so. Oh, I forgot to mention, guys, that the Dow is up 478 points. It's up 1.8%. The Nasdaq is up 155. It's up 1.96%, and the S&P is up 50 points, 1.71%. So, I do want to mention that when we have a big day like this, everything feels good, rainbows and butterflies. I talk a lot about managing your emotions when you are on a losing streak or you're getting chopped up, but you also have to be careful and really get a good idea of what your emotions are feeling right here at the moment when you're up nice and big. Your testosterone's up, you're feeling good, you don't have as much fear. So remember, when things are really bad or when they're really good is when you have to really monitor yourself even more carefully. And just because something's up, does that mean you add more positions? Well, you have to kind of look at the technicals on that, but don't stretch it. That's all I'm saying. Just make sure it's a valid position, just like any other day, and try to get your emotions out of it. All right. So Etsy. Let's start off with our first position, Etsy. So I did buy Etsy back here on the 9th of October. I bought it. We had a confluence of signals. We had a nice higher low V2. Here we make a lower low. We rally into the value zone. We have a couple days down. And then the day that I bought it here at 57.20, I bought it because we had a nice V2. Here is day one. Here is day two. Here is day three. Day two washes out day one, showing that the price did go down there on the day we bought it. The day three bar, we closed above day one's close. So day one, day two, day three. Day two washes out day one, day three closes above day one's close. That gives us a nice valid higher low V2. That's what I'm looking for. We also had a positive MACD crossover, which is always important. And cherry on top there was we had the 1050 SMA cross on Etsy, and this is a good long-term quantified back-tested approach with Etsy. So not only did we have the crossover, we had the higher low V2, we had MACD go positive. So when we look at this, how many indicators did we have? Well, we had the higher low V1, the higher low V2 triggered. That is one. We had MACD had the crossover. That is two. And three, it just happened to come at the exact day that we had the 1050 crossover. So that's what I mean about looking for a confluence of signals. So yesterday we moved up nicely, hit a profit target. You can see I hit 2 profit targets here today. Very thankful for that. So far this has been a great trade. I mean, so far from here to the close is just under 4%, barely under 4%. So, moving forward, how am I going to manage this trade? So we are starting to come up here into some previous resistance. Does this mean that we can't go higher and break out to a new high? No, it doesn't mean that, but it just means that back here about the 19th of September, this is where the market said, okay, this is high enough. More, we ran out of buyers. We had sellers come in. Obviously, that's what took control of the market. The sellers took control of the market. So does it mean if we get up here now that we could have some resistance? Yes, very likely, because just in the recent past, the market told us that there was some resistance up here and there were more buyers than sellers. But today, right now, is it different than here? Things are different in the world, right? So it doesn't mean it can't go blasting up through there, but you do want to be aware that that was the previous resistance. We did reject the 100-day moving average, which is not great, and it is a downward sloping moving average. Does that mean I'm going to get out of the trade today? I don't think so. I think I'm going to hold it. I think what I'm going to do is I'm going to key off of this 200-day. If today we would have gone above the 200 and closed below at the same time, we're right up here at this previous resistance, then very likely I would go ahead and take off the trade. But I'm going to see whether or not we can test that 200. And if we test the 200 and we fail, I will go ahead and get out of the trade. If we continue to move up, stay above the 200, then I will tighten up my stop and I will use a close below the 200-day moving average. I will also, if we get up here and test this previous high, that's what the orange line is. If we get up here and fail, that could also be a possibility for me to get out. If we continue up to the 70 RSI, keep on moving, I will hold it. If we reject the 200, if we reject the 70 RSI on an intraday basis, I will also lock in profits. If we blast through that and keep moving up, then my ultimate profit target is up here at the 6 ATR channel. And at that point, I will run out of shares. So anyway, that is the plan. Oh, and to the downside, can't forget the downside, because we have now moved nicely up and away from our entry point. We've moved at least one ATR from the entry point. Now I will start locking, tightening up my trailing stop. My trailing stop at this point on Monday would be a close below today's low. So that is the plan for Etsy. Hope that makes sense. Murat says the position was leveraged, so the first day it moved 2.1%, so I made 21%, then lost 60%, so I ended up with the 8% profit. Hey, I'd always be happy with the 8% profit. Good job, Murat. All right, next on deck is PayPal. So I did buy PayPal yesterday. I bought it on the 10th of October. The reason that I bought it, the previous day we closed under the 250 day. You can see this is the little line here is the 250 day. Previous day we closed under. Got this right at the close. If you guys remember, I got it like with a half a second to go because it closed over the 200. And the reason I like this is because if you backtest PayPal with the close under, back over the 250, it backtests positively. And so that is why I bought it. I also liked this position, this entry, because it was so close to the 200-day moving average, meaning that even if it closed today to the downside, even 1 penny, I would have gotten out. So giving myself a really good risk potential, a really small risk potential, theoretically, right? I mean, it could have blasted all the way down, but if it even closed 1 penny below, I would have just gone out. That would have been my end of day stop. I would have gotten out, locked in that tiny little loss. But if I was right, it gives me huge potential to the upside. And we were fortunate enough that that's exactly what happened. So I did buy it here yesterday at 154. I hit 3 profit targets today. Unbelievable. Haven't hit 3 profit targets for quite a while. So I hit one here at 101.57, 102.60, and I hit that third one up there today at 103.61. And it's come way off of that. As a matter of fact, it hit the blue line today, which was the 50 RSI. So at one point when it was way up here, when we locked in this third profit target, it got above the 50. The market didn't like that. So that will be my signal to get out today. Remember, I'm going from the low 30s, and if I reject that 50, I'm just going to lock in profit. So this was a great one-day trade. We did get out of probably 20% here, and here, but I'm really glad we got out of some at the higher level. But we did reject the 50 RSI. Unless by some miracle we close back above this blue line, I will go ahead and just call that a really nice one-day trade. All right, the all-famous SPY trade. So in case we have some new viewers today, I do want to talk about the SPY trade. I do buy the SPY every day at the end of the day, every single day, regardless of technicals, regardless of what the chart says. I buy the SPY at the end of the day. I sell it first thing the next morning, and I do this every single day. But this is based upon data from a long-term backtest. This is from Liz Ann Saunders at Bespoke Invest on Twitter. So you have 2 options. Option number 1 is you buy the SPY at the open each day, and you sell it at the close each day. So buy at the open, sell at the close. Buy at the open, sell at the close. If you would have used this approach since 1993 every day, you'd have actually returned a negative 13.9%. But if you do the opposite, which is what I do, and I buy the SPY at the close each day, sell it the next morning. I do this every day. Buy at the close, sell at the morning. Buy at the close, sell next morning. If you would have used this approach from 1993, you would have actually returned 634.2%. Compared to doing the opposite, buying at the open, selling at the close, negative 13.9%. So what does this mean? We know the stock market's gone up dramatically since 1993. What this means is that all the gains in the S&P since 1993 have not come from the open to the close. You can see it's actually had a negative return. All the performance has come from people bidding it up in the after hours and bidding it up in the pre-market session and then selling it into the open. So you can see the blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. Obviously, the blue line's results much better than the orange line's results. And, this is a good time to point out that if you're a day trader, this is what you're working with. You're working with, historically, the moves not coming intraday, and that's exactly when you're trying to trade, right? So that's why I, hold positions overnight. There's actually just a edge in holding positions overnight, and you can see it based upon the difference with the blue line and the orange line. So that's why I'm not really a big fan of day trading. I like this chart because what this chart shows is it shows if you have a trading approach that has an edge over the long run, how it can play out, right? And if you could have used this approach since 1993 till now, you would have done very, very well. Doesn't mean that, there were some years in here where where it really did not work and you thought, what is going on with this? And the key takeaway here is that with any trading approach, you need to position size properly because look, what about if you would have started right here and really used a lot of size? You would have thought this was the worst trading approach ever and you probably would have quit. But if you use a reasonable position size, I use 10% of my capital each day to buy the S&P. Then, if you have drawdowns, which you will have, I promise you, right? Because this chart shows you in a long-term, using a long-term approach that has an edge, that the edge will play itself out, but in the short term, anything can happen. So I really like showing this chart. No matter how good your approach is, doesn't mean it's going to work all the time. So always keep in mind to position size conservatively so you can stay in this for the long run. All right, so that being said, I did buy the SPY yesterday at 293.24. I bought it at the close of the market and sold it today 296.28. So just about 3 points overnight, held it overnight, got out this morning. Really nice profitable trade. And I've been using this since February 26th, and it has been a very good approach so far. The month of May, I think I lost 80% of my overnight SPY trades. But just like the chart I just showed you, that's going to happen, right? But actually, I believe that today I made an all-time high with the S&P approach since I've been using it since February 26th. And I am right up against my yearly high today as far as equity. It's almost there. I think it's a couple $100 away from it. So we'll see where the market closes. But I'm very, very grateful for that. We stayed out a lot of this mess on the S&P. We were positioned pretty light, and then yesterday, we added some new positions. So yeah, I think I'm a couple $100 with my yearly high in the equity count. So I am definitely grateful for that. So with the S&P, I will be buying this again today at the end of the day and selling it first thing Monday morning. All right, lastly, UNH. So I did buy UNH back here on September 30th. I bought it for 3 different reasons. First reason is we went under the 30 ATR channel. We closed back over the 30 ATR channel. And why is that significant? Because 90% of price action stays above the negative 30 ATR channel and stays below the positive third ATR channel, meaning that if prices get down here at the bottom of the channel, it's probably a pretty good time to look at it. Doesn't mean just because they're there you buy it. You need some kind of trigger also. It did go under and back over the third ATR channel. That is positive. in of itself. Not enough to take the trade, but it is a contributing factor. Second reason is I had a really nice V1 entry previous day. Here we have the low. Day that I bought it, it washed out the low, closed above the previous day's close. So that is a valid V1. At the same time, we have an under 30, back over 30. That is very, very good. In addition to that, the previous day, we closed under the 30 RSI, and the day that I bought it, it closed over the 30 RSI. So we had a V1 entry, we had a rejection of the third ATR channel, and we went from under 30 back over 30. That is the reason I took this trade. So move sideways, hit some profit targets here, hit some profit targets here. I can't remember if I hit one yesterday or not. I think I did. And then today you can see I hit 2 more profit targets. So this has been, a really good trade from entry to where it is right now, 3%. But you can see I did hit 2 profit targets way up here earlier in the day. Currently we're at a 48.98, so we did go above 50. You can see this designated by the blue line. We did go above 50 intraday, and currently right now it looks like we might close below 50. So I will, if we do close below 50, I am definitely going to exit this position. But this has been a really good trade, and I'm really grateful that we hit those 2 profit targets up there higher. All right, so that's it. So quick recap: Etsy, 2 profit targets, looks good. Really no reason to sell this. I'm going to see how it reacts around the 200. PayPal hit 3 profit targets today. It did reject the 50. Looks like it's going to close under the 50. So I will go ahead and just lock in the entire profit on this trade. This has been a great one-day trade. SPY, we had that really nice. We bought at 293.24. We sold at 296 just overnight, real quick. So I will be buying this again at the end of the day. And UNH, 2 profit targets today. Looks like it very close to rejecting the 50 RSI. I mean, it is under the 50 RSI right now. So if it stays under the 50 RSI, I'm going to get rid of it. Most likely, I'm going to get rid of it anyway. I don't like this kangaroo tail where you open lower, you go way up high, and then you're closing near the lows. That, or pin bar reversal. This doesn't look good either. So most likely, I will be out of lock in my one-day profit on PayPal today, and then also lock in on UNH. All right, how we doing on time here? All right. Hey, Bing He is here. Good to see you, Bing He. I've been watching your OC trade, right? Wait, now I think I mixed that up. I don't think this was Bing He trades. Maybe it was. Let me know, Bing He. But anyway, I hope it is, obviously. I know somebody had this trade. Probably on this V1, V2 here. I think maybe it was Bing He. So anyway, I hope it was. But good to see you, my friend. Bing He's our friend from Singapore. Hey, Marco, what's going on, buddy? Good to see you, sir. If there's anything I can do for you, any questions, you just please let me know, okay? All right, let me take a look. We are cranking. We are still in cranking mode. All right, give me 1 second. Okay. Okay, so Bing He said has not hit second ATR channel. Got pretty close, my friend. Got pretty close. So you didn't take any off yesterday. Anyway, you can let me know what you did, but regardless, nice trade. All right. So listen, this is the part of the podcast or the live stream, whatever we want to call it, where I do like to concentrate a little bit on trader psychology. I like, I have a few favorite Twitter channels that I look at their posts. They specialize each day in, good trading psychology, good trading words of wisdom that they like to share with people. And I'm such a huge fan of trader psychology, how important it is. excuse me, how important it is in your trading, what a skill it is to develop. And this is from one of my very, very favorites. This is from Stephen Goldstein at AlphaMind101 on Twitter. If you have not subscribed to AlphaMind or Stephen Goldstein, please do. He's a long-term professional trader. Now he's a professional trading coach, and he really puts up good information that you should read and internalize. Read his post every day. It's going to help you. And by the way, I did a podcast with Stephen Goldstein last week, and it is coming out tomorrow. So I'll give you guys a link here in a second. I'll show you guys a link, but it is coming out tomorrow. So I'm really interested in listening to that. And if you guys would like to learn a little bit more about me and how I got started trading and my career and the ups and downs, then that's what I will be discussing on the podcast. But Stephen says, the art of trading. Trading is not just knowing what to do. It's about having the ability to make the right decisions in the right moment under pressure. This is not about doing, but state of being. If you can get your being right, you are more likely to do right. And, guys, this is very, very true. Like I was saying at the beginning of the podcast, it's not just about knowing the technicals, right? It's about knowing. It's about doing what you're supposed to do at the very moment you don't want to do it. Sometimes you want to really buy, but your plan does not call for you to buy. Sometimes you really want to sell, but your plan does not call for you to sell. Battling your emotions, sticking with the plan is so important. Really, trading comes down to doing something that you don't want to do or not doing something that you do want to do, right? And so basically, state of being. Trading is not just knowing about what to do. We know what we're supposed to do. It's about having the ability to make the right decisions in the right moment under pressure, right? Doing the things we don't want to do, not doing the things we do want to do because our emotions are turned up. The volumes on our emotions are turned up. This is not about doing, but a state of being. If you can get your being right, you are more likely to do right. So, it always circles back to being under control, having your emotions in check, and being able to do what you don't want to do or not do what you do want to do, right? It's not about the technicals, guys. It's about your psychology and managing your emotions, and that is a skill. That is the most important skill. So thank you so much, Stephen Goldstein. Like I said, you guys really, please go to AlphaMind and subscribe. And I do want to show you real quickly here. This is his website, alpha-mind.net, and the podcast with my interview will be on there tomorrow. You just scroll down here. It's not there yet. This was the previous podcast. But I'm going to go ahead and just put this in the chat here, guys. And so I just put the link there, but it does come out tomorrow. I'm not sure what time. But like I said, if you'd like to learn a little bit more about me and my trading and all that kind of stuff, it will be released tomorrow, and you can learn about Stephen more and his partner Mark, who was great. So anyway, thank you, Stephen, so much. Really great post, perfect timing. So thank you for everything you do. Thanks for that great podcast. You have so many good guests, and guys, don't worry about just listening to me on the podcast. Listen to all the podcasts. He has some really strong traders on there with some really good advice. So check it out. So, all right, we'll move that and move this away. All right. All right. So we have 26 minutes to do this. All right. Well, let's get started. Bing He says, I was watching PCH, but volume is low and bearish fractals formed on October 4th. I decided to let this trade go. Oh, on October 4th. Okay. All right. Well, you have OC though. That's good. All right. Look at Apple, everybody. This is unbelievable. Interesting. We are at a 70 RSI right now, right? This is not all the time, but many times this is generally about how high things will go before they move sideways or maybe dip down a little bit. Does this mean you want to go ahead and short Apple right here? No, absolutely not. It's very strong. It's closing out of the third ATR channel. I mentioned before 90% of prices cannot get out of the third ATR channel, but this was strong enough to actually close out of the third ATR channel. So if I was in this trade, I would be watching this 70 RSI very closely. If it would close under the 70 today, being that it's above it, I would actually go ahead and exit position. But it doesn't mean you want to go ahead and short the position. So anyway, Apple has had a really great ride. For me to get into Apple, I'd have to have it move back into the value zone, move sideways, look for a V1 or V2. That is the most likely next trade on Apple, but I can't buy it up here. Doesn't mean it's not going to go higher. Certainly could. More likely than not, it will if it closes above the 70 RSI. But any of you who have Apple, congratulations, has done really, really well. Adobe. So currently we're at a 52.33 RSI. I don't see any new trades here today. I know Steve bought it here when it closed under the 200, back over the 200. So that was a really good move, right? With the close under the 200 as his stop. And I would imagine if it closed under 50 RSI, Steven would consider taking this off today. But I imagine if it closes above 50, he will keep it. So MACD is positive. We've bounced off the 200 day. We have the 50 SMA above us, downward sloping. So that might potentially act as some kind of resistance, but nothing here for me today on Adobe. Going forward, we have a 1050 crossover. That might be entry to the upside. Advanced Micro Devices having a nice day. Does have a V2. Here's day 1, day 2, day 3. However, we on today, which is the day 3, we did gap up, so this would not be a valid V2 for me. But here's the V2, day 1, day 2 washes out day 1, day 3 closes above day 1. But the way that I trade with my filters is I can't buy this gap. But we had a MACD crossover. This all looks very very good, but I couldn't buy it here even if I had other signals. It's a little too high. Amazon's doing okay today, but seems to be underperforming the market. I've been waiting for a 30 RSI dip. Didn't get there. We do have a positive MACD crossover, which is positive, but it's not enough just for me to buy just because we have a positive MACD crossover. We came from under the 1 ATR channel. Looks like we're rallying into the channel. I will be looking for a pullback, ideally 2 days, and looking for a higher low V1 or V2 to see if we can resume the trade. Alternatively, I could buy over the 200 with the close over the 250-day moving average. That is a good back-tested approach. And if it closed below, I'd get right back out, or a close back above the 200 would also be good as well. So really no trades on here for me on Amazon. Well, Boeing is interesting. We came outside of the channel, into the channel. We came down. We didn't get a valid V2, higher low V2, but today we do have a valid higher low V2. Here is day 1. Day 1. Here's day 1. Day 2 washes out day 1. Day 3, if it closes above day 1's close, that would be legitimate. And the close over there was 374.96. All right, let me quickly do some math here. I would have done this earlier, but it didn't look like it was going to trigger, and now it looks like it's going to trigger. All right, so that's a possibility today. Caterpillar, big strong move above the 200-day. I don't think I would buy it up here. Doesn't mean it can't continue to go up, but you know, it's above the 1 ATR channel. Big move today, 6% move. I don't think I'm going to chase this. All right, DDM. So DDM has a good 1050 crossover. Unfortunately, this is one of the charts that doesn't work, although that should be fixed next week, by the way, on Trade Navigator. But let me show you real quick with my handy little tool here. Right now it's at 49.83. Somewhere in there. The 1050 EMA crossover is a good crossover approach for DDM. We are up here right now, but we still do not have a crossover. So if that continues to move up, I may buy it next week, but I'm not going to buy it today because of that. Dow Jones, big strong day, pegged right at the 100-day moving average. But like I said, for as far as the crossover trade, I'm going to be using the DDM 1050 EMA crossover to get interested. Walt Disney, MACD turned positive. Is that just enough to go long? No, it's not. You have to have some other type of approach. The crossover on Disney is the 1050 EMA, so we don't have that there yet. Of course, Etsy we hit 2 profit targets. That's doing well, but nothing we have to do with Etsy. Ford up today, nothing there. Facebook, big strong day. Steve bought this back here on this V2 back above the 200-day. Move sideways, move sideways, move sideways. But today, Steve got the payoff there. So congratulations, bud. But nothing for me on Facebook right at this moment. Five Below, I considered buying this yesterday with this higher low V1 back above the 100-day, but I decided to go with PayPal instead. And it also failed at the 200-day, but of course the news today supersedes that. So anyway, that's one that got away from me, but great trade, but nothing there. Gold, we did have to get out of gold for a loss yesterday with the 10, with the 5 crossing under the 20. That's unfortunate, but when it goes down again the next day, you're like, oh, I'm glad I got out. So on gold, I'm looking for a 520 crossover again. Google. Nothing on Google at the moment. Goldman Sachs, really great trade. Steve had this trade yesterday. We had to close under the 200, back over, and now we've moved up nicely. We've cleared the 50 SMA, which is a good sign. We've cleared the 50 RSI, which is a good sign. So fantastic trade, Steve, but nothing there for me. IBB, I would be looking for a 520 crossover, so nothing of interest there now until we have a 520 crossover. Intel, big strong day, closing out of the 1 ATR channel, which is always positive, but too high for me to buy. Russell 2000 looks like it has a close over the 200-day. This wouldn't be the worst entry here today, because if you're wrong, you'd be wrong under the 200. Even if it closed a penny under, you're smack dab in the middle of the value zone, which is good. But I think on IWM, I'm going to wait for a 1050 SMA cross. That is a good back test. So nothing on IWM. Johnson & Johnson, nothing on Johnson. Coca-Cola, working on a V1 here, but not there yet. Money is going into more growth-oriented stocks. Coke is more of a value stock. It's actually down today, so I don't see anything there. Lockheed Martin, boy, gapped up nicely, reversed down, lost the 50 RSI, so nothing on Lockheed Martin. MasterCard, having a nice day off of its highs. What I'm waiting for on MasterCard is the 1050 EMA cross to get long. And you can see right here, the 10 is still under the 50, but next week it's likely this may trigger, and that's what I would be looking for on MasterCard. Altria rejected the downward sloping 50-day moving average, so nothing there. At this point, I would be waiting for Altria to have a return to value into the value zone, the green lines, somewhere in here. Look for a V1, V2 to get me back long. Merck. Just kind of choppy mess here. Really nothing on Merck. Microsoft. Nice move up. MACD's positive, just too high here. We're at some previous resistance. At this point, I would like to see it come back down, move sideways, have a V1, V2. Netflix, darn it. I really considered buying Netflix yesterday with this beautiful V2. It was such a big bar, I decided to let it go, see if I could get a little bit better price on it, but the market did not cooperate and it has moved up nicely. So it would have been a good trade, but anyway, nothing here. You know, now that I didn't get this trade, what I'd be looking for is a move back into the value zone, sideways movement. And halfway to this bar would be excellent. Somewhere in this is where I would be looking to re-enter Netflix if it gets there. Might just head on up, and that's all she wrote. Nike, just too high, above the 1 ATR channel, too high. Philip Morris, too high, near the 3rd ATR channel. PayPal. Well, I am going to be getting out of PayPal today. It definitely looks like it's going to close under the 50 RSI. Thankfully, I hit these 3 profit targets. So now I've hit 2 profit targets above where the price is. So I'm very happy for that. But I'll definitely be exiting this this trade here at the end of the day. But this was a great trade. The Qs. All right. So we do have a valid crossover today. We have a 520 EMA crossover, and that is a good back-tested system. I'll show you real quick over here on ETF replay. I'm using this by permission. So if we backtest this since January 2001, you can see the backtest does return better than just buying and holding, and the drawdown is almost a little bit more than half of the buy and hold. So it outperforms buy and hold, and the drawdown is half. So that's a pretty good proposition. So I will be buying the Qs today. I have to hold my nose a little bit to buy this trade. I don't really like buying it above the 1 ATR channel. If the crossover would happen here, I would just not have taken it. But right here, it's on the line. So I will be buying a full position of QQQs based upon the 520 crossover. We have a MACD crossover here as well, so that's all good. You know, the reason it concerns me is that we're at the 1 ATR channel, and we're also at some previous resistance up here, but it is a good back-tested approach. This will be a robot trade. I will just trade this robotically until I either run out of shares to the upside or I get stopped out with the 5 closing back below the 20. So I will be buying this at the end of the day. SPY, of course, I am going to be buying this again at the end of the day, my overnight SPY trade. SSO is the double leveraged S&P. SSO does backtest very well with the 1050 EMA. Right now we're at 128.36. This is one of those charts that I'm not getting. That's close. But the 1050 on the SSO is not crossing over yet. So next week, if the SSO does, the 10 EMA does cross above the 50, I will go ahead and enter that, but not today. I might want to point out that the 1050 EMA cross on the regular SPY does also backtest well, and it does have a crossover right here. But because I do the overnight SPY trade all the time, it's going to be confusing for me and for the podcast. So I'm just going to wait for the SSO to trigger if and when it triggers, and then I'll take that one, and it will keep things more simplified. Bonds really getting hit hard here. I would be looking for some kind of bounce down here where we have a 100-day moving average. At the same time, we're very likely to have something like a 30 RSI. So I'm just going to sit on my hands, be patient, see if we can pick up bonds down here. I think that would be a sweet spot. Tesla moving up, no signals. Twitter, nice day today, but really no entry on Twitter here for me. UNH, oh boy. All right, so that's really sold off. So anyway, this definitely is going to sell under, it looks like it's closing under the 50-day moving, or 50 RSI. We did hit these two profit targets, so I'm going to go ahead, just take this whole trade off the table at the end of the day. So it's been a good trade. I know oil is up today. I think this is a glitch with the chart. So nothing on oil. So VIX is starting to look somewhat interesting, to be honest with you. I mean, you know, we're still under the 10, 30-day EMA cross, which shows there's volatility. That's still in place. We've had a big sell-off. We're still in the value zone. We're right back at this previous support. MACD is still positive. So, you know, I'm not going to buy VIX here, but I wouldn't be surprised. I mean, it now is coming into some kind of support. If we can move sideways for a couple more days and then have a big stab down, a reversal back up, V1, V2, I would go long the VIX again. I've had some really good trade on VIX, bought VIX right here, had a nice move up here, was patient, but now we're coming back down into support. So we'll see what happens, but nothing now. Verizon, be interesting to see if it can close above that 1 ATR channel. If it closes above the 1 ATR channel, that is quite positive. If it closes under, so if it goes above and under, that's not so positive. Walmart, I'll tell you what, we have a really distinct double top with the bearish divergence. You know, here we make this top, you can see how strong the bars were over here. Now we make a higher high, but you can see we barely have any green. This is what Dr. Alexander Elder calls a double top with a bearish divergence. It means this last move up here did not come on as strong as momentum as this. So, you know, we're at a 66.54 RSI. If we got up to the 70 RSI and lost it, if we got up to the 70 RSI at the same time we got to the third ATR channel, I might consider shorting that up there. I'm not going to do it now, but the context of the chart is starting to turn a little bearish, even though it looks really positive. But from a momentum standpoint, it looks a little bearish because we have the high with the deep bars. We have a higher high with hardly any bars. This is what Dr. Alexander Elder would be considering shorting, but on nothing today. Energy up nicely today, really nicely today, getting close to that 50 RSI. I imagine the people that bought down here would be looking to possibly take some profits if we fail at the 50. So nothing on XLE. XLF, big strong day today. No triggers there. Real estate actually down today. That's because bonds are down, interest rates higher. Utilities. So, you know, we had to move up. We came into the value zone. We rallied. And Kurt, if you're paying attention, we did rally. We made a lower high. So even though we're in the value zone here, because we made a lower high, I need it to wash out this first low. So if we could move down, wash out this first low, get a V1, V2 down here, that would be ideal, but nothing today. And healthcare gapped over the 200, boy, really off of its high right now. So we're off of our high. We're off of our high like 100 points. So nothing there. So potentials for today then. I kind of do like Boeing. I like this higher low V2 above the 50, above the moving average. I like Boeing. PayPal we are definitely going to get out of with that major rejection of the 50. S&P, that's all set to go on autopilot with the market on close. So let me take a look here. So that gives us two options. Boeing with the V2, the higher low V2, Yesterday we washed out the bar. We rejected day one's low. Looks like as long as we close above 374.96, I am going to go ahead and take a position in Boeing because of this higher low V2 over the moving averages, over the 50. So I will be buying that, and I will be buying. Does the Q still have the crossover? 1880, 83, 1850. Yes, but at least we're buying it at a little bit of a discount back in the value zone, so I do like that. So we have 5 minutes. Oh, hey Anthony, how you doing, buddy? Sorry. Okay, I'm running a little low on time here, but let me show you. Yes, it is a gap, but it's a different system. The gap, if we had a V1 or V2, we can't allow the gap, but this is a crossover system, right? This is the 5 crossing over the 20, so that's fine. That's not part of the filter. The gap is only with the V1s or the V2s. This is a crossover signal, so we don't factor that in. Okay. All right. So I've got to make these trades in a couple accounts here. So, okay, thank goodness. All right. Okay, so I have an order to buy the Qs. I have an order to buy the SPY. I have an order to sell PayPal. Okay, so that's all on automatic. So really all I have to do here is watch Boeing. And then over here, another trade on Boeing. So I actually have, yeah, I have everything. Oh, look at UNH. How dare you? How dare you? Anyway, this is one of those examples where I'm really glad I phased out at those profitable levels, right? So what's the market doing here? Oh, now we're down 350. Interesting. All right. So Etsy's staying. PayPal is going. SPY we're rebuying. UNH is definitely off the table there. And then we'll have to watch Boeing. Is Boeing going to hold there? 374.96. So looks like we're okay. So that's really the only trade that I'm going to have to make at the moment. Oh, now we're down 344. Interesting. So UNA is going to sell. Spider is automatically going to buy. PayPal is automatically going to sell. Etsy we don't need to do anything with. The Qs with the 520 crossover we are buying at the end of the day. And Boeing, as long as it holds above 374.96, we're good to go there. Is it going to hold? But yeah, it's a nice V. It's a nice higher low V2. Above the 50 RSI, that's better. Looks like we're struggling with the 10-day. Oh, now it's under. Now it's under 374.96. Uh-oh. Well, looks like we're going to definitely get a better price on the SPY. That's for sure. And it doesn't look like we're going to buy Boeing. Oh, yes, we are. And we got it. Man, that was close. That was that was just like PayPal yesterday. All right. So Etsy, we're continuing to stay in Etsy with the 2 profit targets. Um, the PayPal we are out of because we rejected the 50 RSI, but thank goodness we hit those 3 profit targets. So I'm totally stoked. That was a really, really good trade. So we're out of PayPal. Let's see. SPY is our new entry, and we got filled on SPY at 296.28. 296.28. All right, we're down 1 penny already. Okay, that's our new position on SPY. UNH, we hit those 2 profit targets, rejected the 50 as it often does. So UNH was a really good trade. Thank you, UNH. That was nice. The Qs, we did buy the Qs on the 520 crossover. Let's see where we got filled on the Qs. 191.11, right where it's at. Okay, that's our new entry. This is a 520 crossover trade. This is a mechanical trade, no discretion involved, which makes it easier on my end, I'll tell you, when you don't have any discretion. So as long as the shares stay, as long as the 5 stays above the 20, the 5 EMA stays above the 20, I will keep that, phase out if it moves my way till I'm out of shares, or the 5 crossing back below. And then Boeing. We got Boeing at, because of the V2, higher low V2, day 1, day 2, day 3, day 1, day 2 washes out day 1, day 3 close above day 1's close. 374.96 was the close, and we closed at 375.09. So that must have had a lot of buying in that last few seconds. So that is our new entry there. And just in case you're wondering, as far as where my stop would be, here is the washout bar, halfway of the washout bar, roughly somewhere in there. So if I'm wrong, gives me pretty small space to be wrong, but a nice upward move if I'm right. So let me just check real quick and see. So yes, we still have Etsy, we have the Qs, we bought the SPY. And that's that. And that is that. So let me go over here real quick. Let me take a real quick gander. Something. Etsy, add a UNH. Okay. All right. All looks good. All looks good. So listen, guys, before we get into questions and answers, just want to put in my quick plug, which I do every day. Hope it's okay with you. But I do want to let everyone know that I do offer private one-on-one coaching, teaching, and mentoring lessons. I really do enjoy trading. I've had really good success with my clients. You know, I have a 10-hour course. It's 5 2-hour live Skype calls, just me and you, back and forth. I'm going to be teaching you everything I know, and then I'm going to have you teach it back to me. But you know, what I do here on the live stream, I hope is helpful, but it's me speaking. But as any of my students know, when we turn the tables, you have to teach it back to me. It's a whole different deal. right? So you're going to really understand trading, I think, on a lot more different levels than just listening to me. So I think it's reasonably priced. It's $1,000 for 5 2-hour sessions. And, it's really important for me that my students succeed. So I do put a lot of energy into the calls. I do put a lot of energy into teaching them. I really want my students to succeed. I've been trading for 24 years. I use a variety of methods. I've been through it all. And I think, what I teach is very valid and takes a lot of things into consideration. So if you're interested in possibly having doing the one-on-one course with me, please let me know. You can reach out to me. My email is in the description of this video. You can also reach out to me on Twitter. But, even before the lessons start, even before you commit to want to take the lessons, what I like to do is I'd like to have a 30-40-minute conversation with prospective clients just to learn a little bit more about them, understand a little bit more about their trading journey, what their challenges have been, what their approaches are, what their goals are. And then if they decide, they want to do the course with me, then I'll put together a trading plan based upon kind of the particulars of what you told me. So anyway, if you're interested, please reach out. I think you'll be happy that you did. I think you'll get a really good return on your investment. So hopefully, right? So, and then lastly, if you do like today's podcast, if you're getting some good value out of this podcast, if you're learning something of value, please do me a favor, hit the thumbs up button. It really does help YouTube promote the channel out to more people. And Lord knows there's a lot of people out there that need help with trading. They need some mentoring. They need to learn some good trading principles, not just real stuff, not pie in the sky, make tons of money, but real stuff. And, I'm hoping that's what this channel is doing. So, you can help me get other people in here to learn by hitting the thumbs up button or sharing it on social media or telling your trading friends. So if you could do that, that would be awesome. I'd appreciate it. At the very least, hit the thumbs up button. So, okay, that's my spiel. My spiel like wears me out. I'm telling you, I can speak all hour, but my little spiel just wears me out more than anything. All right, let's go through, see what's happening here. Sorry, there was just so much to do today. Steve says, my trades all worked out great today. Steve had a monster day. What would you have? Let's see. Steve had Goldman Sachs. He had Adobe. He had Facebook and Etsy. So we shared a couple trades, and then he had other couple trades that were fantastic. But Steve Burns is a trading master. If you guys don't follow him yet on Twitter, you should, at Joseph Burns. You should also visit his, let me just put this up here real quick because New Trader U. This is his site here. He has really great information here. He uses he posts such good articles here, and they're free. Go check it out. He also has a 3-time-a-week video newsletter where he breaks down the market. I subscribe to it personally. I watch it every single time. And his Twitter handle is at sjosephburns. But this is a great resource. You guys should check it out. So thank you so much, Steve. Anthony says, isn't that a gap on QQQ? Okay, so we talked about that. My filters do not let me take V1s or V2s when we have big gaps. But because this is a moving average crossover, Anthony, it's a different approach and it doesn't factor that in. So that is why I took it. I'm glad I got it back in the value zone. It's a little bit moral victory. Up here, I was thinking, do I even want to take this trade? It's so high. I thought, well, I'm gonna go ahead, hold my nose and buy it. But I decided not to at the last moment. Or I'm glad it closed under the 1 ATR channel. So a little bit better price, I should say. Sorry. He says, when market rally a lot for a few days, do you have any fear that the next day market will go down, especially if your trade nearly hitting the target soon? Yes, of course I do, He. Of course, I would be lying if I said I didn't worry about the market going down every day. That's just part of trading, but yeah, you can have that fear, but doesn't mean you still shouldn't take your trade. But when we had our call being when I scale out of things, the way that my scaling out approach is, the closer it gets to my profit target, the larger percentage of shares that I take off the table. And so, I bought here. If I hit a profit target here, maybe I'm going to exit 8% or 9%. These profit targets up here were probably closer to the 18-20% range at each one. So, the way I combat that is to scale out with the formula that I've developed. The closer you get to the profit target, the more shares you take off. The farther away you are from the profit target, the fewer shares you take off to give you better risk to reward. So, I'm happy to show you how to do that, Bing He, but with your really high commissions, it's not going to make sense. So, if you ever do switch over to a low cost or no cost broker, I'm happy to help you do that. I studied one-on-one with Dr. Alexander Elder, and when we got to the portion of exiting a trades, his approach is very subjective. He says, if it's enough, it's enough, right? It's a little hard for me because I'm so precise, but he said his power word is enough. If I have a trade, it's moved up nicely, I'm happy with it. Just take it. It's enough, right? I mean, you can get into the weeds on that, dissecting that, because what's enough, right? You have to have bigger wins than your losses over time to make money. So enough better really be enough. But yes, I completely understand what you're saying, Bing He, and yes, I do get concerned. Like here on your Owens Corning. I mean, you got very close to your profit target. I understand that. And now it's reversed back down, which I know that's frustrating. What do I say? I mean, with scaling out here, you would have hit some profit targets up here. There's no doubt. This price action today with this reversal is pretty negative. So I don't know what you did with it. It made a higher high. That is good. I could see holding that, but I could also see getting out of this as well. If we have a close below the previous day's low, then that certainly would be kind of a black and white reason to get out of this trade. Bing He says, a disciplined trader should take profit only when target is hit. Well, no, I wouldn't say that. Because if your profit target is hit, that's great. But on the way up to your profit target, if you have some really bad price action that tells you it's stalling and moving down, that is also a reason to get out. I mean, take, for example, PayPal. Oh, shoot. I did all my lines. All right, so my ultimate profit target on PayPal was right here. That was my ultimate profit target. From buying it here. Went up nicely, boom. But the price action that I had to work off of today was the 50 RSI. The 50 RSI was up here. So it didn't hit my profit target, Bing He. It didn't hit it. Doesn't mean I'm going to hold it. If it would hit my profit target, great. But because it had negative price action, I'm not going to stubbornly hold to my price target because it rejected the 50 RSI, and so I took it off the table. So I hope that helps. But Bing He, you're in a tougher position there because you're having to hold on longer to your trades because of your commission. So, if I was in that position, yes, I would have to be a little bit more patient, and hopefully my profit targets are going to hit. But again, if there's some kind of price action, big reversals, really big volatile down day, I may just have to go ahead and just take the trade off the table, even if it's a small win, right? So I hope that helps. Jesse, hey buddy, what's going on? Good to see you, sir. Hope you're doing well, Jess. Let's see, what does Jesse have to say? Hi, Greg, and follow Gosseteers. Oh my goodness, I have never heard that name, Gosseteers. That's funny. I got some nice script from TOS for 0.45 ATR readings and all MA showing price pain. Oh, fantastic. I also figured out script for 50 RSI midlight on lower study. Oh, that's really good. You know, Jesse is one of my students, and we have our final lesson on Sunday. I need to get you and Kurt together because Kurt also uses your same trading platform. And if you wouldn't mind, that would really be nice if you could share that with Kurt because, you know, those are the same issues that Kirk's trying to figure out as well. So if you've already figured them out, that would be awesome of you if you could share it with Kurt. And I'll get you his email that you could email him, and hopefully that's okay, Kurt. But I think we talked about that. Murat. When you look at double top, double bottom with bullish bear divergences, you look the entire period, not just the momentum of the day's peaks. Yes, you are correct. I actually discussed this last night with Kurt. I mean, here you have the peak with the highest momentum, right? So that's an easy one. What one were we looking at? Walmart, I think it was. Yeah. So Walmart's peaks here, right? But the highest momentum was back here. So it seems normal that you would use the high of the peak and use this to the double tops with the divergences and all that. But the way I was taught by Dr. Elder is no, you use the momentum of the high of the move. So even though this is the peak, you measure off of the high of this move over here. Does that make sense? Hey, MJ, what's going on, brother? Looking forward to our call tonight. Jackson says, hey, Greg, bit late today, but hope everything is well. Also, Jesse, I was actually looking at ATR scripts in G Sheets and was nutting out a more automated scaling out way by plugging the data in. Oh, that sounds good. Sounds complicated to me in my limited technology role. I was actually looking at ATR scripts in G Sheets and was nutting out a more automatic scaling out way by plugging the data in. Oh, that looks good. So, I guess that's like an Excel sheet. Jackson is a technology expert, so this is more up his alley. Oh, that's great. Well, maybe we can share that stuff around too. Being he said, decided to take a loss on AEP. I regretted taking this trade once I took it on October 7th. Greg was right that it was going to form a lower high. Oh, dang it. I don't like when I'm right when it goes against you guys. Oh yeah, this is what I was talking about. Jesse, Kurt, Anthony, listen up, right? We made a high, we have a low, we make a lower high. So if you have a lower high, you don't want to take any V1s or V2s until we wash out that low, and that's what Bing He's talking about. He took a V on October 7th. Okay, sorry, man. Dang it. So yeah, when you make a lower high, you don't want to take any trades until it goes under. But I can understand, it rejected this one ATR channel, which made me think that it would go back down. And on the dip, we didn't have any sidewards movement, so I'm not surprised that didn't work out. Jesse says, hey, MJ, G Sheets is in Google Spreadsheets. I think that's what he's talking about. Jackson says, Greg, do you use as a broker, by the way? The best broker for me in Australia is Interactive Brokers. I used Interactive Brokers for many years. I just switched, as most US based are offshore accounts, IB's local account. I think, Jackson, that Charles Schwab or TD Ameritrade, very respectable, very well known, and they have zero commissions now. I just switched over from Interactive Brokers. I mean, Interactive Brokers is great. I mean, they have more deposits from the largest hedge funds in the world at Interactive Brokers, but they still do charge a commission where Schwab and Ameritrade, or not Ameritrade, but TD Ameritrade do not. Jackson says there's a few discrepancies, but might be able to forge something out from both scripts. Happy to chat. Okay, well, I'll get you guys in contact if that's okay. Kurt says, yes, please, Jess. I'd love to have those. Yeah, that sounds exciting. I'll get you. I'll trade emails back and forth this evening. So I've been getting script to help automate by scaling out process of Greg's. Oh, okay. Well, there is the email. If you want to chat. No problem. I forward them to you while I speak with Greg on Sunday. All right, good. Oh, man, I'm glad that this, people in the group are able to help each other out. Yeah, it is, Greg. Bloody complicated, but I thought it could help reduce the calculation, but I'll chat with Jesse. You might be able to nut something out. All right, good. All right, well, great day today. Did not quite get my high. I missed it by about $300 for the year, but not too bad. Not too bad, $300 within the high of the year, especially what we've gone through. So I think we've navigated this market pretty well, everybody. I think we've navigated it pretty well. So, all right. Well, listen, if there's any other questions, let me know. Otherwise, I'm going to get out of here. I'm going to go for a hike, come back, get some dinner. I have a call tonight with Justin in Australia. So I'm looking forward to that, looking forward to know more about his trading world and his trading journey. And like I said, if you guys are interested in having that Skype call with me for possible lessons, you just want to kind of kick the tires on me and I want to kick the tires on you a little bit, just reach out to me and we'll schedule that. Murat says, yes, it does. Thanks, by the way. I strongly suggest fellows to read Trading for a Living by Dr. Elder. It is available on audio as well, but one has to see the charts. Yeah, it's a great book, Murat. I have an autographed copy of it sitting right there looking at it. When I studied one-on-one Dr. Elder, he signed my book, of course. But yeah, it's a very, very good book. Dr. Elder likes double tops, likes double bottoms, with the bullish and bearish divergences. It was Walmart, wasn't it? And Walmart right now has a pretty serious double top with the bearish divergence on the MACD. Doesn't mean you go ahead and short this immediately. It does not mean that. It just means that in the big picture, it's starting to lose momentum, but you still have to have a trigger. You still have to have some kind of trigger that shows you that it's starting to go down or rejecting higher levels. I mean, what would that trigger be for me? The best trigger would be up here. We reject the third ATR channel. We reject the 70 RSI because that gives me some good movement back down. If I short right here, even if it goes down, it's probably going to catch support right here. So, on short trades, I am much more particular. I mean, I'm particular with long, but I'm super extra particular on short trades. But in the context of this chart, high, break the back of the bull to the downside. Now we're higher with the MACD bearish divergence. Yes, I would be looking for somewhere up in this range to short, if I even short. But the TD account is US based through, though, yeah, Greg. So it may present some large transfer fees as I don't believe the account will be local. Okay. Yeah, I'm not sure. I don't have an account at TD, and I'm not familiar with the fees from other countries. I just haven't had any experience in that. So anyway, new positions. Boeing today with the V2, higher low V2. It's good. It's right in the value zone. If it does move, I have good reward to the upside. If I'm wrong, theoretically, I should be wrong pretty small. Etsy hit the 2 profit targets today. I have to see how it's going to react around the 200. If it goes up above the 200, close it back below, I'll just take the whole trade off the table. SPY, that's anybody's guess overnight what's going to happen, but we do know over the long term that buying in the afternoon, selling in the morning on SPY is a profitable move over time, at least so far, right? Could change in the future for sure. And then Qs, we did buy the 520 crossover, EMA crossover. That's a good, valid, back-tested approach to trading the Qs. So glad I was able to get it back in the value zone. Audiobook is only an old trading for a living, I think. Make sure you have the new trading for a living, as has some very good updates. Yeah, that's true. There was trading for a living and then the new trading for a living, which is definitely different, but both by Dr. Elder. So, all right, everybody. Jackson, nice seeing you. Look forward to our call tonight. Thank you for coming. Murat, thank you always for your input, my friend. Murat's our friend from Norway. Always great to have you here. Kurt, great lesson we had the other night, and look forward to our next lesson, which I think is on Monday. Jesse, thank you, sir. Hope you're doing well. Stay safe out there, and I will speak to you on Sunday night. Bing He, good to see you, my friend. I hope you have a good day over there in Singapore. Anthony, hope that answers your questions on the Qs with the gap. In this case, it's okay because it's a crossover. Congratulations on all your profit targets you hit today. I'm proud of you, buddy. Steve Burns, thank you, sir. Always great to see you. Hope you have a nice weekend. Say hello to Holly and the dogs. And Marco, good to see you, sir. And if you have any questions or anything I can help you with, you just let me know. And I think that is it. So listen, have a good weekend. Go out, do something nice for somebody, hold the door, say hello, give somebody a smile, right? I mean, this world's gotten crazy and people just seem more disconnected than ever. So, you know, try to do something nice every day for somebody. It's a good policy. It's good for them, and it's good for you too. All right, so we shall see what the market brings this weekend, or we'll see what the news brings this weekend. And hopefully I will see you guys next Monday during the last hour of the market. So take care, everybody. Have a really great weekend. Be safe. Have fun. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and Forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.